Bitcoin plunged in early Wednesday trading after failing to secure a strong foothold above $9,700 earlier this week. The benchmark cryptocurrency was trading 1.15% lower at circa $9,512 as of 10:17 UTC. The move downhill came as a part of a corrective pullback from $9,792 resistance, established on Monday. Traders perceived the price top as their cue to exit their bullish positions for small profits. The bearish correction, meanwhile, is looking to extend itself further. Part of the reason is Bitcoin's volatility, which has fallen to its 8-month low, according to readings from Bollinger Bands. Also, the daily trade volume on BTC/USD charts looks meager enough to validate an upside continuation. Bitcoin's uncanny positive correlation with the S&P 500 also points towards further losses. Ahead of the Wednesday open, futures tied to the U.S. benchmark index edged lower by 0.87%. The downside sentiment appeared as investors assessed concerning signals from the economy, including a resurgence in virus infections in parts of the US, Europe, and China. Julian Emanuel, the chief equity and derivatives strategist at New York-based investment firm BTIG LCC, noted that the S&P 500 could fall further in the coming session. The veteran said in a note to investors that the U.S. benchmark's growing disconnect with its fellow American index, the Nasdaq Composite, could lead it lower towards the lower end of its trading range. The Nasdaq reached a record high on Tuesday, leaving the S&P 500, as well as the Dow Jones behind. Meanwhile, Mr. Emanuel also noted that if the Cboe Volatility Index (VIX) moves above 45, it would lead the index towards its June 15 low at 2,965. In the previous instances, VIX levels between 25 and 45 have resulted in broader declines in the S&P 500. The CFA Institute, a group that comprises of veteran global investment management professionals, also reported that only 10% of their 13,300 members see a V-shaped recovery. Many found the current stock market rally divorced by the economic reality, driven merely by a vast policy response from central banks and governments. A crash in the S&P 500 could drive Bitcoin lower alongside. Traders looking to cover their margin calls would sell the most profitable asset of their portfolio first to seek cash liquidity. That may lead the Bitcoin, one of the best performing assets of 2020, down. The next cryptocurrency plunge could be more significant, but technical analysts find $8,600 minus $9,000 a safe downside target. On a brighter note, the market now has better cash liquidity than it had during the March 2020 crash. It may also assist in limiting Bitcoin's downside bias to a certain extent, making the cryptocurrency as a safe haven like gold against a falling S&P 500 market.